The whole idea behind investing in the stock market is to produce income. Actually, trading the market is really no different than running a retail store. You simply buy something at a wholesale price and then sell it at a retail price. Why then, you might ask, do so many people lose money in the stock market? The answer lies within one word: management. A successful store owner will only buy merchandise they are familiar with and sell it for a reasonable price that a customer will pay. More often than not, they will also hire and pay a manager to help them with business-related activities, thereby enabling them to maintain a well-run and profitable business. This same strategy can also be applied to stock market investing. Short-term trading can be very lucrative, but it is also risky. Your merchandise can be bought and sold in as little as a few minutes to as long as several days or weeks. In order to be successful, you have to know what your risks and possible rewards are on every piece of merchandise you buy, which will help you determine your hold time. In addition, you need to know how to recognize a short-term opportunity and what your possible gain might be on each buy and sell action. The basic concepts of short-term trading must become second nature to you before you will be successful. You must be able to recognize the difference between potentially profitable trades as opposed to those that you need to avoid. For example, a hot tip on the evening news or given to you by a friend might be enticing. However, since the time the news was aired or your friend first heard about it, the market will have already reacted and the opportunity has passed. Market timing is a very important element of stock trading. For example, the stock market normally trades in cycles, which makes it necessary to watch the calendar. For decades, most of the gains in the stock market have occurred during the months of November through April. On the other hand, prices have been primarily static during the May to October time frame. These cycles can be used to your advantage when searching for profitable trades. Be aware of market trends. If the current market trend is negative, some investors consider shorting and practice very little buying. Conversely, if the trend is positive, buying may be more lucrative than shorting. I don't short at all, but that is my own personal choice. Shorting should be done very carefully, because if not properly managed, a short position can wipe out your account. If you find this article to be somewhat confusing, then I have succeeded. What I am trying to convey in this article is to treat stock market trading as a business. Most people who are new to stock trading fail in a short period of time. They end up losing their entire account and they never come back. Believe me, there is a better way, and it took me years to discover it. Treat your stock market trading venture as a business and hire a manager. In stock trading, they are called a mentor. A good mentor will save you hundreds, maybe even thousands of dollars more than the fee you will pay. Plus, if you hire one that has a chat room, you will meet scores of experienced traders to learn from and share information with. You won't be sorry, and you will succeed in learning how to earn stock market income.